Chapter 12 Service Costing. Chapter Overview. In this chapter, we are going to learn about application of service costing versus product costing, method of ascertaining service cost unit, service cost statement, cost of services in transport, hotel and lodges, hospitals, IT and ITES, toll roads, education institutions, insurance, financial institutions, others. Service sector being a fastest growing sector and have a significant contribution towards the GDP in India is a very important sector where the role of the cost and management accounting in is inevitable. The competitiveness of a service entity is very much dependent on a robust cost and management accounting system for competitive pricing and identification of value adding activities. Providers of service like transport, hotel, finance services, and banking, insurance services, electricity generation, transmission and distribution, etc., are very much cost conscious and try to provide services in a cost effective manner. Irrespective of regulatory requirement to maintain cost record and get the record audited, service costing becomes integral and inseparable part of each service entity. In this chapter, we will be discussing how costing is done in service sector like transportation, toll roads, electricity generation, transmission and distribution, hospital, canteens and restaurants, hotels and lodges, educational institution, financial institution, insurance information technology and information technology enabled services, etc. Service costing is also known as operating costing. 1. Application of service costing. Internal. The service costing is required for in-house services provided by a service cost center to other responsibility center as support service. Example of support service are canteen and hospital for staff, boiler houses for supplying steam to production department, captive power generation unit, operation of fleet of vehicle for transport of raw material to factory or distribution of finished good to market outlets, IT department services used by other departments, researches and development, quality assurance, laboratory, etc. External. When services are offered to outside customers as a profit center in consonance with organizational objective as an output like goods or passenger transport services provided by a transporter, hospitality services provided by a hotel, provision of services by financial institutions, insurance, and IT companies, etc. In both the situation, all costs incurred are collected, accumulated for a certain period or volume, recorded in the cost accounting system, and then expressed in terms of cost unit of services. Service costing versus product costing. Service costing differs from product costing in the following ways due to some basic and peculiar nature. Tangibility. Unlike product, services are intangible and cannot be stored. Hence, there is no inventory for the services. Cost units. Use of composite costs units for cost measurement and to express the volume of output. Material versus employee cost. Unlike a product manufacturing, employee labor cost constitute a major cost element than material cost. Traceability of costs. Indirect costs like administration overheads are generally have a significant proportion in total cost of a service as unlike manufacturing sector, service sector heavily depends on support services and traceability of cost to a service may not economically feasible. Service cost unit and KPI. To compute the service cost, it is necessary to understand the unit for which the cost is to be computed. All the costs incurred during a period are collected and analyzed and then expressed in terms of a cost per unit of service. One specific issue with service costing is the difficulty in defining a realistic cost unit that represents a suitable measure of service provided. The cost unit to be applied needs to be defined carefully and frequently. A composite cost unit may be deemed more appropriate. For example, hotels may use the occupied rooms days as an appropriate unit for cost assignment and control. Other typical cost units that may be used include in transport services, passenger kilometer in public transportation, quintillion kilometer or ton kilometer in goods carriage. In electricity supply service, kilowatt hour is used. In a hospital, patient per day, room per day or per bed, per operation, etc. are used. In canteen, per item or per meal, etc. is used. In cinema, per ticket is used. Hotels uses guest days or room days. Bank or financial institutions uses per transaction or per services. Educational institutions uses per course, per student, per batch or per lecture. IT and ITES uses cost per project or per module. Insurance uses per policy, per claim, per TPA. The costing should be comprehensive enough to show the effects like off-season and peak season demands, full-time and part-time, etc. Key performance indicator. Key performance indicator, also known as KPI, are the quantitative and qualitative which factors which are commonly used to assess the performance of an organization which are important to achieve its goal. Like calculation of cost for a cost unit, calculation of cost or revenue per KPI helps to the performance against industry standards. For example, in case of telecom industry, average return per user is a key indicator, shows average revenue generated from a user of its service. The list below shows few important KPIs for some service industries. Industries transport. In transport, number of shipments, meaning this logistic metric monitors the number of orders that are shipped out of the warehouse. Truck turnaround rate, the time from which a delivery truck enters the warehouse to collect or deliver product to when it exits the facility. Leading time, that is order cycle time, the amount of time in between order placement by customer and receipt of order. Then again, on time and in full, the number of orders delivered according to the schedules and quantity specified. Hotel industry. Under hotel industry, cost per occupied room, the average cost per occupied room. Occupancy rate, the ratio of rented or used room to the total amount of available rooms. Revenue per available rooms, the average revenue per available rooms. Days. Hospital healthcare industry. Bed occupancy rate, the proportion of hospital bed in use at any one time. Bed, then staff to patient ratio, the number of staff resources present to attend to the patient in a hospital over a certain period of time. Average treatment charge, the average amount that a faculty charges a patient for a treatment. Gross burn rate, under IT and ITES sector. Gross burn rate, the rate at which the company uses up its available cash to cover operating expenses. Customer acquisition cost, the amount it takes to attract new customer lifetime value, the typical net profit a company generates over the entire life cycle of a single customer. Monthly recurring revenue, the amount earned each month through subscription, renewals, new sales, upsells, and fluctuation on a monthly basis. Churn rate, the percentage of customers that cancel uh, their recurring subscription over a given period of time is called churn rate, cost per feature, how much a specific feature costs your business based on usage and cloud cost. Next is uh, next is telecom. Average return per user. How much money a company is making for each person using its service. Subscriber acquisition cost. Cost involved with gaining new subscribers. Network operating cost. Expenditure incurred on continual upkeep to telecoms network. Gross revenue retention. How well a company is retaining its customer based on factors such as sales, price increase, organic customer growth, and more. Educational sector. Instructional cost. The cost of part-time and full-time faculty members. Administrative cost per student. How much an institution is spending on administrative services on a per student basis. Tuition cost. Cost acquired by student on a semester or annual basis. Student to faculty ratio. The number of students per faculty member on a campus wide basis or by department. Then insurance sector. Average cost per claim. The average cost of each claim made, component of claim cost, cost which are associated with a claim like legal fees, time to settle, administration cost, and report delays. Cost per quote, the cost that the company incur in order to get a quote in front of a potential client. Administrative cost per policy, the cost of the policy administration to number of policy outstanding. Average policy size, the total amount of premium collected by the number of policies issued for a given period of time. Methods for ascertaining service cost unit. Composite cost unit. Sometimes two measurement units are combined together to know the cost of service or operation. These are called composite cost units. For example, a public transportation undertaking would measure the operating cost per passenger per kilometer. Example of composite unit are ton kilometer, quintillion kilometer, passenger kilometer, patient day, etc. Composite units may be computed in two ways: absolute basis and commercial basis. Absolute basis is a weighted average, whereas a commercial basis is a simple average. In both bases of computation of service cost units, weightage is also given to quantitative factor rather than quantitative factor alone. Weighted average or absolute basis. It is a summation of the product of qualitative and quantitative factor. For example, to calculate absolute ton kilometer for a good transported in is calculated as follows: summation of weight carried into distance first plus summation of weight carried into distance second plus summation of weight carried into distance till n. Similarly, in case of cinema theaters, price for various classes of seat is fixed differently. For example, first class seat may be provided with high quality services and hence charged at a higher rate, whereas second class seats may be priced less. In this case, appropriate weight to be given effect for first class seat and second class seat to ensure proper cost per composite unit. Simple average or commercial basis. It is the product of average quantitative and total quantitative factors. For example, in case of a goods transport, commercial ton kilometer is arrived by multiplying total distance kilometer by average load quantity. In both the example, variable cost is dependent of distance and is a quantitative factor. Since the weight carried does not affect the variable cost, hence and is a qualitative factor. To understand the concept of absolute ton kilometer and commercial ton kilometer, the following illustration may be referred. Illustration 1. Equivalent cost unit, equivalent service unit. To calculate cost or price of two more different grades of service which uses common resources. Each grade of service is assigned a weight and converted into equivalent unit. Converting services into equivalent unit makes different grades of services equivalent and comparable. For example, a hotel has three types of suites for its customers: wise, standard, deluxe, and luxurious. Following information is given. Type of suite: standard. Number of rooms: 100. Room tariff: nothing. Deluxe: 50. Room tariff: 2.5 times of standard suites. Luxurious: room number of rooms: 30. Room tariff: twice of the deluxe suite. The rent of deluxe suite is to be fixed at 2.5 times of the standard suite, and that of luxurious suite is uh, twice as of deluxe suite. Since all three types of room use same amount of overheads, but to attach qualitative weights, these rooms are required to be converted into equivalent unit. This can be done in two ways. First, make all suites equivalent to standard suites. For example, nature of suites, occupancy, and equivalent single room suites. Standard 36,000. Room 100 rooms into 360 days. That is 36,000. Deluxe 18,000. 50 rooms into 360 days. That is 45,000. 18 into 2.5. Luxurious 10,800 rooms. That is 30 rooms into 360 days. That is 54,000 of standard room. That is, in total there are 1,35,000 standard room for 360 days, making of all suites equivalent to luxurious suites. Standard rooms are 36,000, but they are equivalent to 7,200 luxurious rooms. Deluxe rooms are 18,000, but they are equivalent to 9,000 of luxurious suite. 10,800 of luxurious suites are equivalent to 10,800 of luxurious suite. In total, there are 27,000 rooms available for 360. Statement of cost for service sector. For preparing a statement of cost or cost sheet for service sector, costs are usually collected and accumulated for a specified period, wise a month, quarter, or a year, etc. The cost statement for service may be prepared either on the basis of functional classification as done for product costing or on the basis of variability. Cost sheets on the basis of variability is prepared classifying all the costs into three different heads: fixed costs or standard charges, variable costs or operating expenses, semi-variable or maintenance expenses. Treatment of depreciation, fixed or variable. If related to inflection of time or calculation or calculated on time basis, will be treated as fixed. However, if depreciation is calculated on the basis of activity, level or usage, it will be treated as variable cost. Treatment of interest. Interest and finance charges shall be presented in the cost statement as a separate item of cost of sale. In general, interest is treated as fixed cost unless otherwise given. Applications of costing methods in service costing. Costing technique vis service sector. So far in previous chapter, we have learned how to collect, accumulate, and calculate costs for each cost elements like material, employee, direct expenses, and overheads. We also learned the various methods of costing like job and contract costing, process and operation costing, joint products and byproduct costing. Then again, cost management techniques like standard costing, budget and budgetary control, marginal costing are also equally applied in service sector. In general, the service sector are either labor or capital intensive or both. That is the reason the proportion of cost element differs from manufacturing sector. A manufacturing sector may have higher material cost than labor cost, but in case of service sector, the situation is reversed. The system and technique for cost collection, accumulation, and valuation is similar as that has been learned in previous chapter. For each cost elements, the overhead allocation, appropriation, and absorption techniques are also very similar. Method of costing vis-a-vis service sector. The choice of method of costing depends on nature of service provided. For example, job costing method may be suitable for a business which is engaged in development of customized software, healthcare, etc. Process costing may be suitable for utility business like power, water supplies. Joint products costing may be suitable for business which are providing bundled services like telecom, event management, educational institutions, etc. 5. Costing of transport services. Transport organization can be divided into two categories: goods transport and passenger transport. The cost unit for goods transport organization is ton-kilometer, that means cost of carrying 1 ton of goods over a distance of 1 kilometer. Cost unit for passenger transport organization is passenger kilometer, that means cost of carrying one passenger over a distance of 1 kilometer. The costs are shown under the suggestive following heads. First, standing charges or fixed cost. These are the fixed cost that remains constant irrespective of the distance traveled. These costs include the following: insurance, license fees, salaries to drivers, conductors, cleaners, etc. if paid on monthly basis; garage costs including garage rent, depreciation, taxes, administration expenses, etc. Variable cost or running cost. These costs are generally associated with the distance traveled. These costs include the following: petrol and diesel, lubricant oils, wages to driver, conductors, cleaners, etc. if it is related to operation, depreciation, any other variable cost. Semi-variable costs or maintenance costs. These costs includes the following: repairs and maintenance, tires, spares, etc. The head for a cost may change as per the situation or condition. For example, salary of driver may be treated as standing charges or running cost depending on the situation and nature of his employment. Costing of hotels and lodges. Service costing is an effective tool in respect of hotel industries. Hotels are run on commercial basis. Hence it is necessary to compute the cost, to fix the price of various services provided by the hotels and to find out the profit or loss at the end of a particular period. In this case, the cost associated with different services offered should be identified and cost per unit should be worked out. The cost unit may be guest day or room day. For calculation of cost per guest day or room day, estimated occupancy rate at different point of time, for example, peak seasons or lean seasons, are taken in account. Costing of hospital. A hospital is providing various types of medical services to the patients. Hospital costing is applied to decide the cost of these services. A hospital may have different departments catering to varied services to the patient, such as outpatient, inpatient, medical services like X-ray scanning, general services like catering and laundry, powerhouses, and miscellaneous services such as transport and dispensary. Unit of cost. Common unit of costs of various departments are as follows: outpatient, inpatient per room day, scan per case, a laundry per 100 item laundered. Cost segregation. The cost of hospital can be divided into two: fixed cost and variable costs. Fixed costs are based on timelines and irrespective of services provided. For example, staff salaries, depreciation on building and equipment, etc. Variable costs are vary with the level of services rendered. For example, laundry charges, cost of food supplied to patients, powers, etc. Of IT and ITES. Information technology, also known as IT, and information technology enabled services, also known as ITES, organizations provide their customer with services or intangible products. These organizations are highly labor intensive. The services of IT and ITES organization may be used for provision of services to or outside customer or provision of services internally. In this sector, employee cost, labor constitutes a significant portion of total operational cost. The direct employee cost is traceable to service rendered. In addition to employee costs, significant overhead costs for offering the services are incurred and are classified as service overheads. To arrive at the cost incurred for rendering the services, it is necessary to allocate a portion such overheads to cost units. Concept of project. In general, IT and ITES industries, the job undertaken are considered as project. Each project is unique in nature and varies in size, functionality requirement, and duration and staff requirements. When a project is taken up, a detailed plan is done by breaking down the project into number of activities and their dependencies. Based on the above project scheduling are developed. Then the skill level requirement for carrying out each of the activities identified and the duration of each and every activity would be ascertained. This process is known as effort estimation. Once the skill level and duration is identified, then the required manpower is identified for carrying out the activities. Normally, project scheduling and effort estimation is carried out together. The cost of development are primarily the cost of effort involved, so the effort computation is used in both the cost and the schedule estimate. Effort involved. Direct manpower. In a typical software implementation project, 3 to 4 levels of manpower would be directly engaged as mentioned below. Software engineer, functional consultant, business analyst, project leader, project manager, program manager, etc. Depending on the nature and complexity of the project being implemented, the number of persons engaged, their level and duration of engagement varies. For example, in a multi-continental, multi-time zone software implementation project, in addition to the above manpower, customer accounting software, portfolio, manager, etc. may be involved. Support man. The cost incurred on the above listed manpower are traceable with the project and hence forming part of direct cost of the project. Support manpower. In addition to the above persons who are directly engaged in project, there could be support persons or indirect manpower who are indirectly involved in the project. For example, quality assurance team, testing team, vision control team, staffing manager, etc., who are indirectly supporting the project by providing required level of support services over the life of the project. It is possible that the indirect manpower may be involved in more than one project simultaneously. Their time spent may or may not be traced on any particular project and will be used across multiple projects. If their time can be identified with a project, they will be treated as direct manpower. Accordingly, the cost incurred on them will be treated as direct cost. However, if their time is not traceable with a single project, then it may be either allocated or apportionated to various projects on some suitable basis. According, the cost incurred on them will be treated as overhead and the same will be apportionated to various projects on some suitable basis. Effort cost. In these types of organization are calculated on the basis of cost per person day or cost per person week or cost per person month. That means cost incurred for a person for rendering services per day, per week, per month. Depending on the requirement of the customer, the periodicity will be defined. For example, implementation of new software may be required 8 to 12 person months. In such a case, the cost will be calculated on per person month basis. On the other hand, implementation of one or two new functional in already implementing software may require 1 or 2 weeks effort. In such a case, the cost will be calculated on per person week basis. Parameters in computation of total cost. Hardware and software cost involved. If they are indefinable with a project, then they are directly allocated to the project. If they are not directly indefinable with a project or not fully allocable in a project, then they are treated as service overhead. Travel and training costs. If they are incurred for a project, then they are directly allocated to the project. If they are not directly identifiable with a project or allocable over a number of projects, then they are treated as service overhead. For example, Java training provides to the software engineer may useful in multiple Java-based projects, hence treated as overhead cost. Effort cost. Effort costs are basically identified with a project. They can be classified as direct cost unless otherwise specified. Effort costs are not just the salaries of the software engineers or programmers who are involved in the project. Organizations compute effort cost in terms of overhead cost, where they take the total cost of running the organization and divide this by the number of productive staff. Therefore, the following costs are all part of the total effort cost. Cost of providing heating and lighting office spaces. Cost of support staff such as accountants, administrators, system managers, cleaners, and technicians. Cost of network and communication. Cost of central facilities such as library or recreation facility. Cost of social security and employee benefits such as pensions and health insurance. In short, effort costs include salaries of the staff concerned and part of the common overhead. Costing of toll roads. The construction of roads brings about a variety of benefits that are enjoyed practically by all sectors of the economy. Highway economic analysis is a technique whereby the cost and benefit from a scheme are quantified over a selected time horizon and evaluated by a common yardstick. The economic analysis involves comparison of project cost and benefits under the with and without project conditions. The project is further subjected to sensitivity analysis by assessing the effect of adverse changes in the key variables. In addition to the combined effect of these changes is also assessed. This helps to gauge the economic strength of the project to withstand the further risk and uncertainties. Cost involvement. The project cost consists of the following two components. Capital cost. The capital cost consists of cost incurred during the construction period. Generally, this sort of road construction project run across the multiple financial years. The total expenditure to be incurred during the construction period is termed as capital cost. The total cost includes the cost of construction of road and other structure and consultancy charges. In addition to this cost, it also includes the cost of construction of toll booths. Construction expenses can be broadly classified as follows: preliminary or pre-cooperative expenses, land acquisition, materials, labors, overhead incurred in course of actual constructions, and contingency allowance, interest during construction period. Operation and maintenance cost. Routine maintenance cost will be incurred once the toll road is operational. Routine maintenance involve patching of potholes, sealing of cracks, edge repairs, surface renewal. Period maintenance for new highway would meet with the accordance with the analysis of the life cycle model carried out for the project. Annual operation cost includes cost of operating booths, administrative expenses, emergency services, communications, and security services and other cost of operation. Maintenance cost includes the cost of annual maintenance and periodic maintenance. Annual maintenance costs include primary maintenance of wearing surfaces, railing, roadside furniture, etc. Periodic maintenance cost includes cost of overlays, wearing coats, painting of railings, etc. Operation and maintenance expenses can broadly classified as follows: toll collection expenses, administrative expenses for day-to-day operations, maintenance expenses, which include routine and periodic maintenance, and interest expenses, incurred for service term loans. Build, operate, transferred approach. In recent years, a growing trend emerged among government in many countries to solicit investment for public projects from the private sector under BOT scheme. BOT is an option for the government to outsource public project to the private sector. With BOT, the private sector design, the finance constructs and operates the facility, and eventually after specified concession period the ownership is transferred to the government. Therefore, BOT can be seen as a developing technique for infrastructure projects by making them amendable to the private sector participation. The fundamental price in determining users levy is if the price for a transport facility is set at a level that reflects the benefit each user gains from improvement in the facility, it will result in flow levels that equate social cost with user benefits. Toll rates. In general, the toll rates should have a direct relation with the benefits that the road user would gain from its improvements. The benefit to the to road user are likely to be in terms of fuel savings, improvements in travel time, and good riding quality. To compute the toll rate, following formula with rounding off to nearest multiple of 5 has been adopted. User fees equals to total distance into toll rate per kilometer. Costing of educational institutions. Educational institutions like school, colleges, technical institutions for education and training are run to impart education and training to students. The objective of running these institutions may be not for profit or for profit. Like other business entities, cost and management accounting is also inevitable for this sector. The government, local body of any other organization which provides education and training to students with an objective to benefit and upliftment of the society are also need cost and management accounting system for cost social benefits analysis, allocation of funds and budgets, performance measurements and evaluation. Income of educational institutions. The source of income of an institution may be classified on the basis of recurrence as follows. One-time fees. These are the fees which are collected once in a course period or for a definite period like admission fees, development fees, annual fees, etc. Recurring fees. Tuition fees, laboratory fees, computer and internet fees, library fees, training fees, amenities fees, sports fees, extracurricular activity fees, etc. The government and other aided institutions may not be permitted to collect various fees like capitation fees and development fees, etc. Further, unlike the trading and manufacturing organizations, these are not free to determine fees beyond the prescribed limit. Other income. The indirect income from transport, hotel, messes, and canteen for the student and staff are provided by the educational institution, normally on no profit, no loss basis. Expenditures of the educational institution. First, cost. Following are the most operational costs incurred by an educational institution. The salary of teaching and non-teaching staff, laboratory maintenance charges, computer maintenance and internet charges, building maintenance, repairs and maintenance of equipment, administrative expenses, finance charges, etc. Cost center and basics of cost allocation. Cost center in educational system institutions are classified as follows. Primary or direct cost centers like civil engineering department, mechanical engineering department. Service cost centers like laboratory, library, sports. Student self-support services like transport, hotels and mess. And administration cost centers like research and improvement examination. Costs incurred are allocated to the respective cost centers if they are identifiable with a cost center and appropriated to services and administration cost centers on suitable basis. Research and development costs. Educational institutions undertake academic research on various fields of specialization. The cost of such research, including personal costs, books, etc., are to be collected through a cost center approach. All costs incurred in that cost center are collected and set off against the revenue generated from such research projects. If any balance is left out as undisturbed, then such balanced cost can be collectively distributed to all other cost centers as a separate cost element, namely research cost, cost of publication of research and other material. In an educational institution, there will be a separate department for conducting research publication related exercises. The cost incurred would be directly allocated to that department. Costing in insurance companies. Insurance or assurance industries operates in providing social security to the person who subscribed for the policy. The insurance company are broadly classified as life insurance and non-life insurance. Life insurers provide assurance to the policyholder life for the insured value. The non-life insurers are providing insurance to the policyholder for actual loss up to insured value for the policy. The insurance company are need to analyze it various insurance products for profitability. The product offered by the insurance company may include life insurance policy with or without maturity benefits, general insurance, health, fire, property, travel insurance, other services, reinsurance, fund management, pension gratuity, and others, etc. Income of insurance companies. Income of insurance company may include premium on policy, periodic or one time, commission on reinsurance, fund administration fees and return on investment of funds, etc. Expenditure of insurance company. The expenditure of an insurance company can be classified as direct and indirect to a policy or product. Direct: commission paid to agent, claim settlement, cost of valuation, premium for reinsurance, legal and other costs. Indirect: actuarial fees, market and product development cost, administration cost, and asset management cost. Method of costing in an insurance. The cost object in an insurance company may be product, a policy, a department or region, an agent, etc. Activity based costing in insurance company. Activity based costing is used for analyzing of cost benefit of a product, policy profitability, etc. Costs that occur in insurance company are to be identified with appropriate activity that have caused its occurrence. Then cost must be reassigned from activity to cost objects based on identified cost driver. Identification of activity and assignment of cost are the most critical for the implication of activity based costing. The activities can be divided into two parts: pre product development activities and post product development activities. Pre-product development activities. These are the activities which are carried out before a product is made. It include market research, product development like specification of coverage, conditions, amount of premium, insurance contract, policy forms, and provision for salary channels. Post-product development activities. These activities is further divided into parts of selling of policy and processing of claim, and selling of policy refer to appointment of distribution of sale channel, solicity for policy, processing of application. Processing of claim includes claim inception, claim estimation, claim settlement, and legal action. The activities costs are assigned to the product on the basis of appropriate cost driver. The cost drivers may include number of hours spent on processing of an application and claim processing, number of application, number of policy, number of claims. In financial institutions. In the past 2 decades, financial institutions have undergone major changes in terms to increase regulation, competition from new entrants from both locally and globally, innovation of new products and services, technological advancement and increasing expectation of new generation customers, etc. Over and above the challenges posed by the prevailing environment as described above, financial institution underwent considerable changes in terms of its high quality sensitive staffing requirement and its productivity. Manpower cost other than interest cost and financial charges is one of the largest single cost component in financial institution. Hence, it is needless to say that financial institutions are more interested in understanding and discovering the way to more accurately allocate such costs to various product range offered by them and its cost customer. If the financial institution is to survive under the present challenge economic condition, it will have to add value to its product and services. It is imperative to note that the financial institution need to know the contribution of its product services and customer to value creation. Cost measurement in financial institution. The objective of cost measurement include understand the profitability by product offered and by customers. Establishment a mechanism for pricing the product by identifying the product level and activity level unit cost. Understanding productivity issues and their relationship with strategic goals of the organization. In nutshell, financial institutions need to understand their position in various product lines and to find out how they can stay in competing edge or become a leader. Activity-based costing in financial institution. Activity-based costing can be useful tool in allocating the cost element to various products offered and the customer being served. Activity-based costing can help financial institutions to identify and analyze the profitability by product, analyze the profitability by customer, identify the activity level unit cost, and build up product level costs, which in turn forms basis for product level pricing, customer level pricing. Financial institutions can improve their profitability by concentrating on products that are more profitable, focus on high margin customers. Costs that occur in financial institutions are to be identified with an appropriate activities that have caused its occurrence. Then cost must be reassigned from activities to cost objects based on identified cost drivers. The concept on activity based costing, as discussed under costing of insurance companies, also applicable to financial institutions. Please refer the same. Other services costing for powerhouses. Powerhouses are engaged either in electricity generation or steam generation. Use the concept of service costing, that is powerhouse costing. Service cost statement can be prepared by identifying the cost associated with the power generation or steam generation. Cost unit is different for electricity generation and steam generation. The cost unit for electricity generation organization is cost per kilowatt hour. That means cost of generating 1 kilowatt of power per hour. Please note that kilowatt per hour is commonly known as a unit. The costs are shown under the following heads: standing charges or fixed costs. These are the fixed costs that remains constant irrespective of the power or steam generated. These costs include the following: rent, rates and taxes, insurance, depreciation, salaries if paid on time, monthly basis, administration expenses, etc. Variable costs or running costs. These costs are generally associated with the power or steam generated. These costs include the following: fuel charges, water charges, wages, labor charges, if paid on the basis of production, any other variable cost identified. Semi-variable cost or maintenance cost. These costs include following: meters, furnaces, service materials, tools, etc. Summary. Service costing. It is application of cost concept in ascertaining of cost or providing services. It is also known as operating costing as relates to operating of a services. Composite cost unit. Unit of service cost consists of two different units. Key performance indicator, also known as KPIs. KPIs are the quantitative and qualitative factors which are commonly used to assess the performance of an organization which are important to achieve its goal. Equivalent service unit to calculate cost or price of two more different grade of services which uses common resource. Each grade of service is assigned a weight and converted into equivalent units. Converting services into equivalent unit makes different grade of services equivalent and comparable. Build, Operate, Transfer. With BOT, also known as Build, Operate, Transfer, the private sector designs, finances, constructs, and operates the facility, and eventually, after specified cessation period, the ownership is transferred to the government. Therefore, BOT can be seen as a developing technique for infrastructure projects by making them amenable to private sector participation.